Welcome to KR's Business Learning Series on Tax Planning for Digital Nomads. With this program, we aim to equip digital nomads with the essential knowledge and tools necessary to meet their tax obligations while traveling and ensure they stay up to date with the tax laws and treaties of countries they visit, ensuring they are not double taxed or subject to unforeseen penalties. Subscribe to our channel to learn more about this and other relevant creative business subjects. We also offer a Tax Planning for Digital Nomads workbook in the description, available immediately after purchase, which will help you understand the tax implications in your home country and abroad. We look forward to sharing our knowledge with you. Also, please like, share and subscribe to help us grow our channel and bring more education to those who need it. Let's get started. The Digital Nomad Lifestyle allows individuals to leverage technology and work remotely while exploring different parts of the world. This unique approach to work and travel offers exciting opportunities and experiences, but it also presents distinct challenges, particularly concerning finances and tax obligations. To navigate these complexities, digital nomads must develop a solid understanding of tax planning. Digital nomads often earn income from various sources, including freelancing, online businesses, or remote employment. With income generated across multiple jurisdictions, it can be challenging to determine tax obligations and ensure compliance with various tax authorities. Additionally, factors such as residency status, visa requirements, and international tax treaties can further complicate tax matters for digital nomads. Tax planning is essential for digital nomads to manage their financial obligations effectively and minimize their tax burden. By developing a comprehensive tax strategy, digital nomads can ensure they meet their tax obligations while maximizing the financial benefits of their unique lifestyle. This may involve establishing a tax residency in a favorable jurisdiction, utilizing tax advantage structures for their businesses, or leveraging tax treaties to avoid double taxation. Ultimately, being a digital nomad requires balancing adventure and responsibility. With proper tax planning, digital nomads can confidently pursue their travel dreams while maintaining financial stability and ensuring compliance with tax regulations around the world. One key aspect of tax planning for digital nomads is understanding the concept of tax residency. Tax residency is typically determined by factors such as the number of days spent in a country, the location of one's permanent home, or the center of vital interests. Digital nomads may need to carefully monitor their time in each country to avoid unintentionally becoming tax residents in high-tax jurisdictions. In some cases, digital nomads may benefit from establishing tax residency in a jurisdiction with favorable tax rates or special programs for remote workers. Countries like Portugal, Malta, and Costa Rica offer tax incentives and residency options for digital nomads, which can help reduce their overall tax burden. Another crucial aspect of tax planning for digital nomads is managing their business structures efficiently. Many digital nomads operate as freelancers or own online businesses, which can have different tax implications depending on the chosen business structure. By setting up a tax-efficient structure, such as a limited company or a sole proprietorship in a low-tax jurisdiction, digital nomads can optimize their tax liabilities while staying compliant with regulations. Digital nomads should also be aware of international tax treaties and how they can impact their tax obligations. Tax treaties between countries often include provisions to prevent double taxation, which can be beneficial for digital nomads earning income from multiple jurisdictions. Understanding these treaties and how they apply to one's specific situation is essential for effective tax planning. Furthermore, digital nomads must maintain accurate records of their income, expenses, and time spent in each country. This documentation can be crucial when filing tax returns, claiming deductions, or proving tax residency status. Utilizing digital tools and services designed for remote workers can help streamline this process and ensure that digital nomads stay organized while on the move. Digital nomads must proactively address their tax obligations and develop tailored strategies to optimize their financial situation. By understanding tax residency, leveraging business structures, utilizing tax treaties, and maintaining proper documentation, digital nomads can navigate the complexities of international taxation and focus on enjoying the unique experiences their lifestyle offers. Another critical aspect of tax planning for digital nomads is retirement planning. Unlike traditional employees, digital nomads often do not have access to employer-sponsored retirement plans. Therefore, they need to create their own retirement strategies to ensure financial stability in the long term. One option for digital nomads is to contribute to individual retirement accounts, IRAs, or other similar tax-advantaged savings plans available in their home countries. Additionally, they can explore offshore pension plans offered by low-tax jurisdictions, such as the Guernsey-based Qualifying Non-UK Pension Schemes, CNUPs. Digital nomads should also consider the role of investments in their overall tax strategy. By diversifying their income sources and investing in assets that generate passive income, they can potentially reduce their taxable income while building long-term wealth. However, it is crucial to understand the tax implications of various investment options and choose those that align with their financial goals and risk tolerance. Estate planning is another essential factor to consider for digital nomads. As they accumulate assets across multiple jurisdictions, they need to establish a clear plan for managing and distributing their wealth upon their death. This may involve setting up trusts, creating a will, or designating beneficiaries for their financial accounts and insurance policies. Furthermore, digital nomads must be aware of the tax implications of their travel expenses. While some expenses, such as accommodation and transportation, may be tax deductible, others may not be eligible for deductions. Properly categorizing and documenting expenses can help digital nomads maximize their tax savings while avoiding potential penalties. Finally, seeking professional advice from tax advisors and financial planners experienced in working with digital nomads is crucial. These experts can provide valuable guidance on various aspects of tax planning, including residency, business structures, investments, retirement planning, and estate planning. By consulting with professionals, digital nomads can ensure they make informed decisions and develop tailored strategies to optimize their finances and fulfill their tax obligations. As a digital nomad, navigating the complexities of taxation can be overwhelming, but careful tax planning can ensure compliance with different countries' tax rules and maximize your financial efficiency. Tax residency is the primary factor determining your tax obligations. Each country has its own rules. You could be a tax resident based on the number of days spent in a country, your permanent home, or your work location. Your home country may still require taxes on your income even if you live abroad, so it's important to understand the rules. Host countries may tax income earned within their borders, even from online work, making it crucial to familiarize yourself with their tax rules. Double taxation treaties help avoid paying taxes twice on the same income. These treaties allow for tax credits or exemptions in your home country based on taxes paid in another country. Always check if a treaty exists between your home country and the countries you live or work in. Keeping accurate financial records is crucial for tax management. Track income and expenses meticulously to understand your financial situation and prepare for tax filings. Save receipts for work-related expenses, which may be tax deductible depending on your home and host country's laws. Utilize accounting software or apps to keep your financial documents organized. Consulting with tax professionals specializing in international taxation can provide valuable guidance. Tax laws for digital nomads are complex, so experts can help you navigate various countries' rules and regulations. Managing Social Security contributions is another important aspect of tax planning. Some countries require continued contributions while living abroad, so be aware of these obligations. Other countries may require contributions to their own Social Security systems while you work within their borders. Retirement planning is crucial for digital nomads. Research retirement savings options available in your home country and consider their compatibility with your nomadic lifestyle. Develop a long-term financial plan that accounts for retirement goals and different tax implications. Proactive tax planning enables digital nomads to manage their tax obligations, maximize financial efficiency, and maintain compliance with different countries' tax laws. Seeking professional advice, keeping accurate records, and understanding residency rules, double taxation treaties, and Social Security contributions are all essential aspects of successful tax planning. Expanding on the previously mentioned points, digital nomads must also consider the implications of their chosen business structure on their tax obligations. Different structures, such as sole proprietorship, partnership, or limited company, can have varying tax implications in different countries. It's crucial to choose a structure that optimizes your tax efficiency while complying with the local laws. Business structures. Selecting the appropriate business structure can have significant tax consequences for digital nomads. Sole proprietorship. As a self-employed individual, you'll typically be taxed on your personal income, and deductions may be available for business-related expenses. Partnership. In a partnership, you and your partner share the responsibility for taxes on business income. Limited company. A limited company is a separate legal entity from its owners, meaning the company pays taxes on its profits, which can sometimes lead to lower personal tax liabilities. Tax-efficient jurisdictions. Digital nomads may benefit from incorporating their business in a jurisdiction with favorable tax rates or incentives for remote businesses. Certain countries offer tax benefits for non-resident companies, such as lower corporate tax rates or exemptions on foreign-sourced income. Consult with a tax professional to determine if establishing your business in a tax-efficient jurisdiction aligns with your overall financial strategy. Utilizing offshore bank accounts. Offshore bank accounts can provide financial flexibility and potential tax benefits for digital nomads. These accounts can facilitate international transactions and currency exchange, making it easier to manage finances across multiple countries. Offshore accounts may also offer tax advantages, such as reduced withholding taxes on interest income or capital gains. Estate planning. Digital nomads must consider estate planning to manage the distribution of their assets upon their death, particularly when holding assets in multiple jurisdictions. Wills. Drafting a will ensures your assets are distributed according to your wishes and can simplify the probate process. Trusts. Setting up a trust can provide greater control over your assets and potentially minimize taxes for your beneficiaries. Tax implications of cryptocurrencies. Digital nomads may use cryptocurrencies for transactions, which have unique tax implications. Many countries treat cryptocurrencies as capital assets, meaning capital gains taxes may apply to profits from buying and selling cryptocurrencies. Maintain accurate records of your cryptocurrency transactions to facilitate tax reporting. Staying informed on tax law changes. Tax laws are subject to change, so digital nomads must stay informed about updates that may impact their tax obligations. Digital nomads should also be aware of the implications of value-added tax, VAT, or goods and services tax, GST, on their business operations. These indirect taxes apply to the consumption of goods and services and can vary significantly between countries. Understanding VAT/GST. Digital nomads offering services or selling products may be required to register for VAT/GST in the countries where they conduct business. VAT/GST registration thresholds. Some countries have registration thresholds based on annual turnover, meaning you may not need to register until your business reaches a certain size. Input tax credits. If your business is registered for VAT/GST, you may be able to claim credits for the tax paid on business expenses, reducing your overall tax burden. Permanent establishment. PE, risk. Operating a business while traveling can create PE risk, which may expose your business to additional taxes in the countries where you conduct your activities. A PE is generally defined as a fixed place of business through which the business of an enterprise is wholly or partly carried on. If your business is deemed to have a PE in a country, it may be subject to corporate income tax on profits attributable to that PE. Utilizing tax-efficient investment strategies. Digital nomads can benefit from investment strategies that minimize tax liabilities while generating income. Investing in tax-deferred retirement accounts. Contributing to tax-deferred retirement accounts can provide tax benefits, as contributions may be tax-deductible and investment earnings grow tax-free until withdrawn in retirement. Tax-efficient investment vehicles. Certain investment vehicles, such as index funds or exchange-traded funds, ETFs, can provide tax benefits through lower turnover and capital gains distributions. Social Security totalization agreements. These agreements between countries can help digital nomads avoid paying Social Security contributions in multiple jurisdictions. Totalization agreements aim to eliminate dual Social Security coverage for individuals working in participating countries. By coordinating Social Security coverage, digital nomads can potentially reduce their overall contributions and simplify their tax obligations. Tax equalization policies. Digital nomads working for multinational companies may benefit from tax equalization policies. Tax equalization is a compensation method that ensures employees on international assignments have a similar tax burden to what they would have in their home country. By implementing tax equalization, employers can help digital nomads avoid financial disadvantages resulting from differences in tax rates and rules between countries. Tax planning for family and dependents. Digital nomads with families should consider the tax implications for their spouse and dependents. Dependent tax credits. Some countries offer tax credits for dependents, which can help reduce your overall tax liability. To further delve into tax planning for digital nomads, it is essential to explore strategies for optimizing income and managing expenses. Income splitting. Digital nomads operating as freelancers or business owners may be able to split their income with a spouse or partner, reducing their overall tax burden. This strategy involves paying your spouse or partner a salary for their contributions to the business, allowing you to take advantage of lower tax brackets or personal allowances. Leveraging business expenses. Many business-related expenses can be tax-deductible, reducing your taxable income. Examples include office equipment, software subscriptions, travel expenses for business purposes, and even a portion of your living expenses if you maintain a dedicated workspace at home. It is crucial to keep accurate records of these expenses and consult with a tax professional to ensure you claim eligible deductions. Tax loss harvesting. Digital nomads with investment portfolios can employ tax loss harvesting to offset capital gains and reduce tax liabilities. Tax loss harvesting involves selling underperforming investments at a loss to offset capital gains from the sale of profitable investments. By strategically realizing losses, you can minimize your taxable capital gains and potentially reduce your overall tax burden. Estate and inheritance tax planning. Digital nomads must consider the implications of estate and inheritance taxes on their assets. Estate taxes apply to the transfer of wealth upon death, while inheritance taxes are levied on the recipients of an inheritance. By establishing trusts or making gifts during your lifetime, you can potentially minimize estate and inheritance taxes for your beneficiaries. Currency fluctuations and foreign exchange. Digital nomads earning income in multiple currencies should be aware of currency fluctuations and the tax implications of foreign exchange. Changes in currency exchange rates can impact your taxable income and tax liability. Utilizing specialized banking services or employing hedging strategies can help mitigate the risks associated with currency fluctuations. Exit taxes. Some countries impose exit taxes on individuals who give up their tax residency or move their assets abroad. These taxes can apply to unrealized capital gains on assets such as property, investments, or pensions. Understanding the exit tax rules in the countries where you have established tax residency can help you plan accordingly and minimize potential liabilities. Digital nomads must employ a variety of strategies to optimize their income, manage expenses, and navigate complex tax regulations. By leveraging income splitting, claiming eligible business deductions, employing tax loss harvesting, planning for estate and inheritance taxes, managing currency fluctuations, and understanding exit taxes, digital nomads can maintain financial stability and compliance while enjoying the unique opportunities their lifestyle provides. Thank you for watching. We hope you found this video helpful and informative. In the description, you will find a link to our Tax Planning for Digital Nomads workbook, available immediately after purchase. Don't forget to check out the next video in this series for more valuable tips and strategies. And please like, share and subscribe to help us grow the channel. We appreciate you.